Traders, welcome to another episode of Market Skycast, the official BluSky podcast. Now, once again, I am here with our BluSky coaches, Coach Ridge, Coach Becky, and Coach Matt. Welcome back, everybody. Glad to have you here as always. Now, before we get into it, until BluSky tells me the sale is over, I am going to announce this every damn week because it is by far one of the best sales that I've seen out there in the prop firm space. And that's 50% off launch plans if you're not already a BluSky trader. So that means you can get started for as little as $30. That's right. Access to capital for as little as $30 to start. So if you haven't used that, make sure you hit that code up and join our Discord because we post flash sales randomly with no warnings, and you want to be able to get these because they're limited spots, and you want to be able to get them, and it can save you some money, get you trading for less money. Now that we got the housekeeping stuff over, let's get right into it. Now, it seems like we say this every week, but things are just continuing to heat up. We think there's de-escalation. We think everything is kind of getting more chill. And then all of a sudden, boom, literally boom. So, Coach Becky, I think you kind of have an interesting approach going into this week. Do you just want to hop right into it?
Totally. I definitely am. I prioritize the geopolitics and the fundamentals between the market for sure, but I lead more heavily into technicals, and then I try and keep my ear on what is going on the broader spectrum. And what I know for sure is there's just instability in the world, and so for me that means higher volatility. I need to downsize my leverage. I need to pay close attention to my higher time frame levels. And let's talk about what day it is right now. This is March 30th. The monthly candle closes tomorrow. So for me, if you look at the monthly chart, she's a beast. Like that is a statement candle if I have ever seen a statement candle on the monthly chart. That's showing me a significant bearish energy. Now, obviously, we have seen in recent technical setups that when we break a low, there's often a retracement. But I can't deny the momentum we're experiencing right now. And so when this monthly candle closes at market close tomorrow, that's definitely going to be on my factor in terms of like thinking about what could happen next. How could we adjust from this huge important closure that we're witnessing closing today and tomorrow? And so for me, I definitely want to pay attention to all of the bigger time frame factors that could influence this market, but momentum is definitely in the bearish mode, and so my eyes are on resistance levels that might react from.
Love that. The monthly. People don't talk about the monthly enough. The weekly, the monthly. I mean, I know Matt's going to talk about it, I'm sure. I see his eyes lighting up. But you know what? A lot of us get stuck in the intraday and, 5-15 minute can't get off of it. That monthly close, it means a lot. And that's great. And I love how you were talking more about technicals than just the headlines, because technicals still do exist, especially these monthly levels, monthly opens, monthly closes, weekly, so on and so forth. And you weren't kidding about that bearish momentum. I was just talking to Riz while we were streaming earlier, and I had to go back to August to find levels to play off of today. And granted, they still work, which is what I love about technical analysis. But yeah, it's hard to fight those trends. So great points. Now, Riz, was there anything specific that happened since our last episode about a week ago? I know there's tons of talking points, but what stood out to you most about, the conflict or what's going on politically wise in the world?
Well, I think with the war in Iran, that's causing, that's just a grenade in the market right now. We've been talking about it, the last two podcasts, and it's an ongoing issue. It's bringing in new recession fears. Moody's AI-driven recession model now puts us at a 49% probability threshold. We're losing 92,000 jobs unexpectedly now. GDP has been revised down 0.7%. The headwinds were primarily on the equities market. Between that, you got the double whammy with tech sliding. You've got court rulings against Meta and Apple. You're seeing them slide drastically. So you don't have anything that's bringing you that equilibrium that can give you that balance. Say, okay, we're taking that hit here, but the market can, balance out on that. It's just like bad news with some more bad news with a splash of some more bad news, So definitely, uh, keep your ear to the ground for the news. We're in a heavy news driven market, that can easily throw those technicals. I know you just set the technicals, but, just being that, you can get any type of manipulated news that just throws you. Right? So just be safe, traders.
Great points. Now, Matt, I'm going to bring up something that's I'm kind of looking at. Now, tell me your thoughts on this, because I know you're watching the news like a hawk. Now, I'm starting to see the conflict is opening up more than just two countries. We have these little side battles going on. Does that change the way you're approaching this, or do you just approach everything as a whole, or do they matter separately? What's going through your mind at this point?
Well, Riz is correct. Right now, the market's embracing every negative conversation that it can possibly find. It's looking for negative conversations to really kind of understand the totality of the environment. But a lot of that negative chatter on the recession side of the equation is based on one thing, and it's the Iranian war and its impact on oil. And Larry Fink came out, gave an interview to the BBC just 2 days ago, and suggested, listen, there's only two conclusions here. And either one, you believe in one of the two conclusions. Either one, there's escalation and oil's going to 150 and we're going to have a global recession, or two, we're going to see de-escalation and oil's going to go back down to 50 and we're going to have a global recovery. And there's not a middle ground here. That's Larry Fink, the owner and runner and CEO of BlackRock, the biggest financial institution in the world, suggesting there are legitimately only two outcomes. So either one, Riz is correct in all of that negative conversation, and we're going to see a rip your face off oil move to 150, and it's going to cause a massive global recession. Or two, you're going to see an alleviation event. And as of right this very second, I don't think we know the ultimate answer to that question. The more time that goes on, though, the probability shifts to recession, and that's why you're seeing recessionary odds go from 20% 4 weeks ago, because there's always 20 to 30% recessionary odds. Always. Like, that is cookie cutter bank 101. We're going to have the probability of a recession in any given year at 20 to 30%. And so when that starts shifting to 40%, 45%, 49%, it's because there is real catalyst in the environment right now that could spark something along those lines. Are we there yet? No, we are not there yet. I've been in this market long enough to realize that we have recessionary conversations all the time. We get spooked all the time. But it is one of those scenarios where I absolutely do agree with Larry Fink that there's only two outcomes here. Either one, we do have a global recession sparked by rising oil and an escalatory situation in the Middle East, or two, we see a massive alleviation. Now, to answer your question specifically, we are seeing escalation right now. It started off with military airstrikes with a limited game plan of basically this. We want to achieve Iranian no nukes. We want the uranium. Period. End of sentence. Number two, no proxies. Iran has basically for 20 years been using proxies to attack the West. And basically the US and the Western allies are saying right now, all right, no proxies, no Hamas, no Hezbollah, and no Houthis. And that's what we saw last week on the escalation side of the equation, Justin. We saw both Hezbollah a few weeks ago, but the Houthis last week start attacking Israel. And so you now have Hezbollah attacking from Lebanon. You have the Houthis attacking from the south. You have obviously Iran launching ballistic missiles every single day. And so the war has expanded. It's expanded in scope, but it's also expanded on our side of the equation as well, given the fact that Saudi Arabia and UAE are very close to starting aggressive military actions and not just defensive military actions. And we also know for an absolute certainty that Russia is supplying Iran with satellite imagery of U.S. bases in the region, and we know China's supporting them from a supply side perspective. So has it expanded? Yes. And as this military conflict, i.e. war, has expanded, you're seeing price expand. And that's what I think is one of the most important questions this week is at the end of last week, we saw momentum expand to the downside. Well, when momentum expands to the downside, you expect more momentum because momentum begets more momentum. Things in motion have a tendency to stay in motion until an object appears that stops the motion. Well, the motion is escalation in the Middle East. What can stop that? De-escalation in the Middle East. And there's a specific pattern that we've seen over the last 4 weeks. Monday morning, the president comes out and tries to pump the market with some type of gaslighting. And that gaslighting works. It's worked for 4 consecutive weeks. It worked here, 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 here. And now on the 4th consecutive week, the boy who cried wolf did not work. The market caught up to it. The market's like, nope, We're sick of the gaslighting. We're sick of the nonsense. We want real. We want truth. And until we're going to do that, we're going to price in this chaos the same way you said last week that you didn't think the market was pricing in this chaos accurately. And the very second Trump said that last week, the market sold off for 2 consecutive days without a bid. Trump comes out today, tries to gaslight the market, does not carry in any capacity. He did the same thing this morning that he did last week. Last week saw a 200-point move to the top side. Today saw a 100-point move to the top side. Didn't last, turned right back over. And so market's looking for a real de-escalation. Things in motion have a tendency to stay in motion until an object appears. And unless that object appears, the bear's going to continue to control the environment.
Yeah, and I feel like we're at a pivotal point, like a house of cards moment, where the de-escalation comes soon, or it's just going to keep going and keep going. And I want to add I know we have a lot of our members are entrepreneurs or own a company or things like that. This is the time when the business owners are watching like a hawk. Is the conflict getting any less? If not, gas is going to keep going up. I have to raise my prices, lay people off. There's just a lot more that goes into it than trading. It's just the economy as a whole, and this is when the lagging indicators
and just think about it from
CPI,
this
kind of
one perspective, Justin. If that conflict ended tomorrow, okay, if it ended tomorrow, we had a peace agreement tomorrow, oil might go down. It ain't going down to what Larry Fink thought it would, but oil would go down. Gas would go down slightly, but there is a massive lag impact here on gas versus oil. And what's going to happen every day that we stay in this conflict and oil stays up is 3 more days of inflation that we have to deal with on the back end. And so that's just something that's going to have a lagging impact economically. There has been certain degree of damage economically already done. Like there's already been economic damage that cannot be healed unless there's time. But we haven't seen the ultimate conclusion yet. And so I think this week is going to be a very important week. I don't expect a conclusion to the escalation this week. I actually expect more escalation this week.
And I know it's hitting people's pockets because I have friends, pushing their vacations back because they're looking at flight prices, gas prices. So it's hitting everybody. And I'm right there with you guys. Great points on all of it. Now that that's done, let's go ahead and pivot into a segment called Market Watch. This is where we're going to look at the geopolitical climate, which we just spent a ton of time on, but it's going to come up again. Don't you worry. Secondly, we do have earnings. We do have other events. We have headlines that comes out. So I kind of wanted to get the coach's perspective on, besides what we just talked about, what are you really looking at in the market? And this can also be technical levels. It doesn't have to be just headlines. You can be looking at a specific setup. Coach Riz, going into this week, is there anything specific that we haven't talked about that you're kind of looking at?
I think unfortunately, I've been in this market, in this administration before. So for me, it's more of a range, until some type of news catalyst drops, especially since we don't have very much market news going on this week. So everything is all going to be really news driven. We don't have any big players going out for earnings this week either. So it'll be, it's just going to be a range, we'll stick within Becky's range from last week, to be honest with you. That has been a sticky subject. She had a great observation there. And I don't think until we break that damn candle, we're not going nowhere.
I love how you brought that up because I think Becky was streaming later that day. And you know what? Exactly what she said happened. We ranged in that candle for damn near a week. And if you're an intraday trader and you took that strategy, you had a great week because you just hit the highs and the lows. If you didn't know that, you're stuck in the middle. You're getting chopped to pieces. So that's a great point. Until something breaks, it's going to be more of the same. I love that. Coach Matt, what are we looking at going into the week?
Well, I think the most important question for me is obviously on the Iranian war side of the equation. But technically speaking, I think it's one thing for the market to find a support level. 6,400 is not that support level. Becky mentioned the monthly charts. In these conditions, you kind of have to go to the longer term timeframes to find where those epicenters of support are. And right now, you got one on the 20 monthly moving average around 62.55. You got a principal polarity zone around 61.70, and you got a significant whole number around 6K itself. But understanding where support levels are one thing. Unless this market can prove that it can carry a bid, who cares if it bounces at support? And so all that's going to do is set up the next sell opportunity, quite frankly. And so for me, technically, I have a very simple rule here. If you can't break the 9 EMA on the daily chart, which is the epicenter of resistance right now on the daily chart, you shouldn't be getting into a bullish conversation outside of intraday analysis, quite frankly. And so the market's pattern the last 4 weeks has been very telling. Up on Monday, hit the 9 EMA, roll over the rest of the week. Up on Monday, hit the 9 EMA, roll over the rest of the week. Up on Monday, hit the 9 EMA, roll over the rest of the week. Up on Monday, hit the 9 EMA, roll over the rest of the week. That's 4 consecutive weeks that it has done that, which means if you want to see a change, you have to see that change, which means it has to close above the 9 EMA. If it doesn't close above the 9 EMA, there's nothing to see here on the bull side of the equation outside of intraday day trading, like legitimately nothing. And so that's number one. But number two, I'm also looking at gold here this week because in these environments, people that don't understand how gold functions historically, they get very confused about gold in these environments because gold is preached as a safe haven and then it doesn't perform as a safe haven in the exact environment where you would expect it to perform as a safe haven, geopolitical chaos. But what happens in those environments is everything goes to a delta of one, everything goes to a beta of one, and the market throws the baby out with the bathwater, quite frankly. And what happens though is gold will reverse before the S&P 500 will itself. And so while everybody's looking at the S&P to try to find where support is, everybody's looking at the S&P to try to figure out when it's going to carry a breakout. Well, I'm telling you right now, if gold can't do it, the S&P is not ready for it because gold breaks before the market does. Gold bottoms before the market does. So if you want that early sign on, hey, are we seeing early reversals in the ES or the NQ? Gold's going to reverse first in that scenario. And we saw that starting to occur last week. We started seeing the ES continue its pattern to the downside, but gold shifts. And right now, it's only based on slowing momentum, but this is the first test it's had against the 9 EMA on the daily chart, right around that 4,600 zone, which even for you day traders out there, my best trade last week was in gold. By far, my best trade was in gold last week. And I kind of feel like my best trade this week is going to be in gold too. And so keep an eye on this 4,600 zone. It's the 9 EMA. It's a significant whole number. And above that, it opens up to 47. It opens up to 48. So I'm very keenly aware of what's going on in gold right now. And I think it's an early indication. And the ultimate situation, is this just slowing momentum in front of a bigger move to the downside? Or are we seeing early reversal analysis? I don't know if we can answer that until we see a close above the 9 EMA. But the point is, gold does reverse in front of the market in market corrections, and we're seeing slowing momentum on that gold chart. And so obviously the ES and the NQ is going to get a lot of love from us this week in all of our content at BluSky. But for me, I'm laser focused on gold this week.
Yeah, great point too. Is stick with the momentum until you get a reason not to, because it's very hard to try to catch a bottom, and especially in this kind of environment.
You shouldn't even try.
Yeah, I agree. You
In your
shouldn't
lexicon. The entire point is support has to hold first, but if you can't carry a bid, it's nothing. And to carry the bid is break resistance.
Absolutely. Now, last but not least, Coach Becky. I know it is a pretty light data week and earnings week, but there's still something. You mentioned the monthly candle. Is there anything else you're specifically looking at going into the rest of the week?
Yeah, there is red folder news on Forex. I believe every day there's something, but they're generally the lighter ones that can cause a little bit of extra volatility. But in the given backdrop of the geopolitical situation and the volatility we've been seeing lately, it's swallowed up within the normal ranges these days. For me, the biggest one on the Forex calendar is Friday's monthly unemployment. However, that is Good Friday that you guys reminded me of. So there isn't even trading on Friday. It's a short week for the market. So that is kind of null and void. So in general, I totally agree on the broader aspect of the geopolitical situation being the driver force. But for me, yeah, like I love the technical conversations as well. And Matt did such a great rundown of all of that. So for me, I absolutely am with the trend right now. We're breaking lows on the daily time frame, and then we are pulling up and having a rebound up to that resistance, but it is, classic Dow theory of lower lows and lower highs. And so for me, that trend has to break to consider entertaining a bullish position on the larger time frame. However, I do see intraday, moves. I think when we do break a low, you have to always be on guard of not chasing that bottom, like not trying to sell in the hole, because we have seen strong retracements out of that. So in the whole, like, I am a little bit of a bear. I'm a bear shirt on even, but I do like to get in at resistances, right? I don't want to short in the hole. I would rather get the ideal, position entry on the pull-ups. And so I would definitely argue to, even if you are a perma bear and you are waiting to keep sinking lower, mind your entries, because we are seeing some strong retracements, and even, a day or two of a bullish momentum in this trend happen. So, I say just kind of lock into your entries as best as you can and leverage down a little bit if these candles are outsized compared to the risk that your accounts can hold, because that's definitely on my radar of sizing down a little bit so that I can, hold a trade these days.
I want to go back to the point where you just said, you basically said, don't just hop in because you're bearish. Wait for the pop, wait for these key levels. And I know myself, when I was a newer trader, you just see it so bearish, so you just hop in. But these retracements in a bear market, if you're not familiar with these bullish retracements, I'm going to use NQ as an example. You can get a 100.12 minute candle like it's nothing. So it's very important for you to mark out these key levels and maybe scale into contracts rather than going full size, just in case you get caught in one of those rippers. Because I can't tell you how many accounts I've blown. And then what does it do? It comes right back to where you wanted it to, and your trade would have been profitable. But you weren't sized properly, you weren't patient. And I think in this environment, limit orders are your friend. Market orders work if you can catch momentum, but I think limit orders are something that especially newer traders really need to focus on. Hit those longer time frame key levels and just roll with it, and don't just market in because you're bearish.
Yeah,
and for me, I don't know.
Entry.
Yeah, for me, I'm a bear until I got to read, just like you. Until they give me a reason not to, I'm only looking for long or shorts on retracements. That's pretty much it. Before we move on to Coach's Corner, anything else anybody want to add going into the rest of the week?
Just in corrections, a lot of times we get into the pre-conversations of early reversal analysis because everybody wants to pick a low. Don't be a hero in this market. People have tried to pick the low every Monday, and every Friday would finish lower. Don't be a hero in this market. When the falling knife is occurring, you let the knife hit the ground and then you pick it up. You'd never try to catch it.
Yeah, and to be fair, what that would look like is we need to see a higher low. We need to see not a lower low on the larger time frame. We need to see a retracement, and then the bears get their turn again, and then they do not win. They cannot break lower, and that will be seen on a multi-day hold on support. And so we have not seen that. We've seen retracements up, and then we've sunk through. And so as that trend continues, what we need is a higher low, and then the bears stop breaking. So that's at least, a week or two conversation, because that is a longer candle pattern that we need to see print.
Mm-hmm.
Yeah, we got to wait for that structure shift before you even think about going long, in my opinion. And Matt, what you said, and I think people get so used to seeing it on social media where like, I bottom ticked the market today. If you didn't catch that, you're not a trader. You know what? You got lucky.
If they really did that, never listen to them again, ever. Your job isn't to bottom tick the market. Your job isn't to top tick the market. There's not an indicator that has ever been created that starts with ticking the low and ticking the top. Literally every indicator gives up a certain percentage of the move to justify the probability. Do not listen to social media in any capacity, but please don't listen to degenerate gamblers on social media. That's absolutely ridiculous. And I see it all the time. Oh, look at me. I ticked the low here. Oh, you were a degenerate gambler that is lying about ticking the low. Get off my screen.
And you got lucky. And there's your weekly Matt rant. Had to get him going. Just there's our preview for the episode. I love
my lawn.
I love a nice Matt rant. Anyways, now that is our segment called Market Watch. We got a lot going on, a lot of key levels, a lot of things we talked about. Next, we're going to get into my favorite segment, Coach's Corner. This is questions from real BluSky traders, mostly newer ones, and we have 3 professional coaches here to answer them. So let's just hop right into it. We had one just pop up in the chat, and I think Coach Matt, this one's perfect for you. At what point does the corrective move become an actual bear market? And that's kind of what we're witnessing right now. A lot of people are wondering this.
You're not gonna like the answer because it's a hell of a
No,
lot lower
I
than the
love when I
price
don't
right
like the
now.
answers.
Eh, there's bearish conditions and then there's bear markets. We're dealing with a short-term bearish downtrend against a longer-term bullish uptrend. That is a market correction and not a bear market. A bearish trend does not make a bearish market. You have market pullbacks, market corrections, then you have the ultimate bear market. If you're talking about it from a trader's perspective, the first establishment of a lower level of support usually gets traders into the, oh my God, bear, 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 bear. Right? Like once you break a support, we're yelling at the bear. But there's actual textbook definitions here. A market pullback is about a 5% clip off the high. A market correction is 5 to 10% off the high, and it can go all the way up to 20%. But once you establish a 20% move from the very tippity top to the low point, that is the official definition of a bear market. I don't think that's the proper way to really think about it in modern terms. That's how it was historically. I feel like the best way to navigate that is from the technical side of lower lows, lower highs, and waiting for a reversal where you have equal lows and equal highs. But the textbook definitions are a 20% downward movement in price, which would officially equate to a bear market.
Gotcha. Great answer. Great answer.
Which would put
Next
silver in the
one.
bear market on one day of volatility downside.
Well, it's tough when you see the market move that much in one day. You think it's just a bear market immediately, but you don't remember how much we pumped before that and how long we've been sitting in this range. So it's great to take a step back and actually see it. That's a great answer.
A bear market would really not even be in until we get to like 5,500 in the ES. Like,
So we got some room to go. All right.
we're like, it's early.
It's early. Okay. So you're saying there could be more
buckle up
blood.
the seatbelt a little bit. We're
I was gonna say.
early in the ride here.
Perfect. Now, Coach Becky, this is a great one for you because obviously, you focus on the psychological and mental side of trading. And I know when I was first getting into trading, this was me. And if it was me, it was probably most other people in this room. But the question is, I watch other traders make money and it makes me feel like I'm falling behind. How do you deal with that?
Ooh, that's a hard one because that's basically like FOMO essentially, and I have had my fair share of that as well. Like, twice in this volatility in just the last week and a half, I have been right on the trade and then get kissed out because my leverage is too high for my account size and my max daily loss, only to see the trade work out. And it's like in that situation, it's like my read was right, my plan was right, the volatility just kicked my ass, and then other people who had the same read profited very nicely from these big moves we're having. So I definitely think that that's an absolute situation, and I would say to try and hold your mindset down as best you can would be to walk away and to remember, like, own lane, own journey. Like, one day does not define you as a trader. And so if you miss a trade, I mean, the market, I would say, has multiple good trades each day, even for intraday day traders. And so you got to remember that the market is abundant in that way, and there's a lot of opportunities. And if you like slide into the negative energy, negative vibe of like, I wish I had, why didn't I get that? That's like, the opposite of an abundance mindset. And so then you're going to feel more anxious. You might chase a trade, you might revenge trade in that situation. So just recognize that experience is not worth it. And remember instead that the market is abundant. Why don't I just take a walk, see what else has got going on, maybe tune out the noise where you're hearing other people's success and you're weighing it against yourself. Because if that's a social media feed or a different group that you're in, I would just kind of back up from that a little bit and lean into something else that brings you joy until your mindset can switch back to that abundance, because you've got to hold a positive psychology wave in order to better capitalize on your system. Because if you're feeling all kinds of frustration vibes, you're going to make poor choices, and then that will be trading emotionally in the opposite direction. You want to stay strategic always. So take a little break and tune out the noise that is not supportive of your journey, because we are all on our own process here.
All right, great. And Matt, let's add to that.
Yeah, the only thing I would say to that, and Becky, wonderful answer, I would say, but the only thing I would say to that is there's a billion opportunities in the market every single day, like legitimately every
really
single
is.
day. You don't need to hit them all. You only need to hit a few of them, and you should cheer on their friends who are hitting the rest. Like, don't hate on other people. Don't fear other people. Like, cheer them on. Cheer them on. They hit them, cheer them on. They're part of your team. Cheer them on. Be happy for
Yeah,
them.
that's a great point.
You
Totally.
don't have to hit every trade. In fact, you miss 99% of the opportunities in the financial world every day. Most people don't even understand them. Most people don't even see them because you don't track every single data point that comes into the market. Focus on your own journey. Focus on your own road that you're on, and learn from those other examples. But never, ever, ever get emotional about them, because this game we call trading. Emotion is a risk to you. You have to learn how to control that. And how I control that is I don't get jealous of other people's success. I'm so happy that other people have success. I get so happy when Riz hits a 170% banger on the zero DTE side of the equation.
Mhm.
I'm so happy when Becky's hitting her greatest short, and I'm like, oh, maybe I should be more of a perma bear. like
Just
like
this spring.
don't get jealous, don't get sad, don't get happy. Stay emotionally balanced and just be happy for other people's success, and try to make sure that you're learning and growing from those examples. But man, I've long held the belief that you shouldn't fret missing opportunity in the market, because once you realize how much opportunity you miss every day, you shouldn't ever even get into that moment.
Okay, so that's
Great.
such a good point, especially now that we have Mike streaming in the morning, because good Lord, do I not have the P&Ls that he has. But I can
I don't think
often
any of us
see, dude, right? I don't have the account size. I don't have the
do.
cojones
With
at this
Mike,
point in my career, but I can often see the trades similarly on a, when I'm really killing it. And so the fact that I might take that with one contract and he might take it with 12, like I absolutely love that. And for me, to echo what Matt said, like that's goals for me. I'm like, oh, look at that pretty number. Like I'm happy with my like $700 or whatever, but like one day as I grow, like look at how great these people are doing that are within our community and are showing us the way. So that's such a great point, Matt.
Yeah. So I have like 3 things I want to add on to this. Matt, great ad, and that's so hard not to be emotionally invested when you see things, but I think that just comes with time. So I love you said
I
that.
think
And
it
then
is time and seat. I do think
yeah,
there's a
it
little bit of
is.
that. Yeah.
It is. And then Becky, you mentioned social media, and you have to in this day and age, because I can't go on social media after a red day, because as soon as you go on, say I was taking long, the first person, if you missed these shorts today, you should stop trading. And I'm like, you know what? Whatever. I'm good most of the time. I missed
I
it
want to
today, but
punt them
it
like
just
Baxter
yeah,
ACLs.
throw my phone against the wall, quit trading. Like it makes me want to do all this stuff. And then lastly, I got to talk about Mike. I was actually talking to him the other day, and he was still in his short full size from a stream from the morning. And this was 4:00. And he goes, "What's the market at?" And we said, he goes, "Oh, okay, yeah, that's a good day." And then he's just so nonchalant. And I know for him, like that would have made my
Wild.
year for him. But for him, it was just another
Because
Tuesday.
for Mike, it's not about the money.
Nope, not at all.
It has nothing to do with the money. For a trader like Mike, once you get
Locked
to a
in.
position like that, it's just about executing your system. That's
Mm-hmm.
really what it's about. It's the same
Letting
way,
winners run.
like if you have a job as an engineer at a company, you're going to go into your job and you're going to execute your job. It's
Mm-hmm.
not emotion. You're not going to have emotion as you're just executing your systems. And so
Yep.
to Mike, who's been doing this a long time and has had a tremendous amount of success in doing this, like to him, it's just about executing his job that he does
Mm-hmm.
every single day. It's not emotional. It's only emotional when you actually manage P&L columns. When the first thing you look at on a day in, day out basis is P&L, it's very telling to people very telling to people that are in this stream right now, because that's usually a very negative sign that the first thing you're looking at is P&L and not managing the individual components of your portfolio, or identifying levels, or getting ready to do your daily routine, or to execute your system. And so it's an individual who we all have deep amount of respect for. We watch him do his job. That's what we're doing, is we're watching him do his job the same way somebody else would watch you do your job, and they'd be like, oh, he doesn't have a lot of emotion in cleaning those toilets.
Yep.
Yeah, it's his job. Like there's
Yep.
not a lot of emotion there.
But to also to your point, Mike has a hell of a lot of fun while he's doing his job. So you can do your
Of
job
course.
right, and you can have a lot of fun. So I
Of
mean, that's
course.
great, and I love you.
I
I love
would
that.
say
Don't chase the
trading's more
P&L.
fun than cleaning toilets, Justin. Yes.
Yeah, don't chase the P&L. Chase the process. The money will follow. And then my last thing I want to bring up is community. You mentioned uplifting each other, seeing other success maybe while maybe you didn't have it. That's what Blue Sky's for. We have this whole community. We have all these coaches, all these great traders. And you know what? If I miss a trade and I see somebody else hits a banger, great. We won. We won as a team, and that's all that matters. Now, last but not least, Coach Riz, I did not forget about you. And this one's going to be, I want an honest answer because you've seen a lot of traders. You've been streaming for a while. So be honest. What do most people fail at trading? And if so, what separates the ones who make it?
Unfortunately, yeah, most traders do fail at trading. What differentiates them, it's various reasons, finally learning enough lessons and they start adhering to a trade plan, journaling and back testing long enough to where they create some real idea of how to manage their trades and don't, learn patience and things of that nature. There's so many different variables that go into a trader becoming successful. And I think that those are just a fraction of them. But, that's what can lead you to becoming a successful trader is, the journaling, back testing, paper trading, being patient, waiting for your trade. It's like a million step process. You can't even say it's like a 10-step process. Feels like a million step process because there's so many just intricacies. You learn the platform, then you learn trade management, then you learn a sizing, and then the psychological step part comes in. And that's probably the biggest one. That's the most difficult one that people can't wrestle with. Being okay with losing and knowing when to keep going and being able to understand whether or not that you need to stop, it's not working, you need to go to bait for trading and regroup like that. So, my best advice for new traders that are out there that are struggling is keep at it. Document your path. Make notes on what's working, what's not working. That's the path to it right there, is that you have to be able to categorize where your path is and how you're going, and then start carving off the stuff that doesn't work and focus on what works and start building on the things that work and finding a good community and those trade buddies to help you succeed and grow.
Amazing answer. And I gave you such a loaded question.
Yeah.
Got to follow up with. Since we've been around here, we've taught people, we stream, we've seen hundreds, thousands of traders. Have you noticed a specific type of person that seems to just get it a little bit quicker? Now, I'll give you like some examples. Younger, younger, older, 9-to-5er, entrepreneur, things like that. People that don't have a lot of responsibilities versus people who have a lot of responsibilities. Is there any kind of one kind of person that kind of sticks out to you?
Personally, I think younger folks, have a tendency to grasp trading faster. I've heard some people talk about kids that play video games, having a better aptitude for, being able to be more, adaptive and reactive to the chart itself. So, they're able to enter and exit the trades more mechanically because of that. So, I think younger folks do have that main advantage that, they're kind of playing, the games and stuff like that. I think the biggest advantage they really have is the lack of responsibility, that an older adult or a business owner might have, having a wife, children, a spouse, those responsibilities, they sneak in on you, and they can really affect your trade psychology and won't let you let the trade actually do what it needs to do. And in trading, that's really important. And a lot of traders get caught up in is that, the psychological aspect of, oh, I'm up $50, but I need them. I could use that $50 when your take profit is maybe another 8 or 9 points away. Then you cut yourself short, and then you realize that it could have gone there and you could have made a little bit more money. What you don't really realize is that how that is affecting your overall trade performance in the day. If you're adhering to 3, 4, 5 trades a day, are you creating enough of a buffer that when that first hit comes that you lose a trade because you didn't follow your trade plan? Now you didn't make enough to cover that buffer. So now you've already broken your first rule and you created your first obstacle. So you can kind of see how you can kind of start creating walls for yourself that weren't even there. And those are just things right there that traders run into that experience and experience really come into a factor and allow the trader to realize, hey, you know what? If I don't do X, Y, and Z, it's going to lead that my next trade, that if it's red, is going to put me in a negative position. So, good luck traders on that.
Yeah. So what I'm getting from great answer. What I'm getting is it depends. I don't think there's a cookie cutter answer for that, because you just spout out you just said 4 or 5 examples and why it doesn't work. And now I got to go back to my man Matt, because this guy has been in financial education for, I don't even know, but I was in diapers, I think, back then. But anyways, Matt, I want to hear your answer for this question.
Yeah, I've taught a lot of different demographics. Every demographic you can potentially list, I've taught to. I've taught around the world. I've taught in lots of different countries. I've taught a lot of different age groups. You name it, I've taught it. The only place I haven't taught is Antarctica, and I'm trying to get there. But the reality is this: there is trading 42 years ago now. There was an open question: is trading is it an inherent skill that we possess, or is it a learned trait? Well, Richard Dennis answered that question 42 years ago, and it shouldn't be asked ever since then, because trading is a learned trait. It is a taught skill set, and it doesn't matter who you are. It doesn't matter if you're black, white, red, yellow, pink. Doesn't matter. It doesn't matter if you're 15 years old. Doesn't matter if you're 3 years old. Doesn't matter if you're 85 years old. Doesn't matter if you're a man. Doesn't matter if trading, investing money does not discriminate in any capacity against anything. Now, Riz is right in one very accurate accord. Young people have a tendency to grasp things a little bit quicker, but that's only because inherently they don't have a lot of information already ahead, whereas older individuals have other advantages. But if you have a desire to learn how to trade and you're willing to put the time in, it does not matter if you're 3 years old or you're 83 years old. Trading does not discriminate, because money does not discriminate. And so it's really about desire. Trading is a learned skill set. The same way we learn anything else in life, trading is a learned skill set. Young people have a tendency to learn more because the way just we are as human beings, we think we're done learning things after we college. Not necessarily true. But trading itself can be learned by anybody. I've taught a 3-year-old how to read a chart. I had a 3-year-old one time record videos pumping crude oil, breaking down intraday analysis on crude oil. 3 years old. It just so happened to be my daughter, but it was 3 years old, accurately predicting higher highs and higher lows on the crude oil chart. I've taught a student in their 90s before, simply because they wanted to keep their mind active as they were going through the conclusion of their lives. And so it's there for everybody. You can do it as well. The equation's really simple. Education plus application is the key to success. And if you don't have the education, you need to put that first.
Great point. I agree with you. Go ahead, Becky. Let's all chime in. Let's do it.
I gotta do it because I have to merge what Riz and Matt said, because to be honest, I think it's the whole picture of this whole conversation is it. And that's what we are all saying. And for me, it comes down to productive hours in the seat. So if you are just sitting, dicking around, gambling with your charts and throwing contracts at the market, that is creating a trader that will blow up and will leave. But if you are sitting in the chart and you are patient and you are drawing your levels, you're asking mentors, you're studying courses, you're finding, reputable mentors to learn from, and you're putting that into practice, and then you're taking good trades and managing your risk, you will become a profitable trader fastest. But it has to be, you have to have your butt in your seat, and those hours have to be productive and focused, because it can go the opposite way. Those hours can be counterproductive and can really harm you financially and psychologically, or they can be building you as a trader. And I would say for the traders that are really putting forth that productive time, every single week that you are in this market and you are trading, you are becoming that profitable long-term trader, because that builds up. Like it just does. Even if your week is red, having a week at the charts where you tried and you listen and you focus and you manage your risk, the P&L doesn't matter. Those productive hours is what will keep you in this game long term. By managing your risk, you don't blow your capital and your mindset. And then by learning every day that you're at your screen, you will just have the strongest foundation to then leverage up once you get there. So I guess I was like, there's such great points, and all together, like just really just try your best when you're at your screen. That's what will be the game changer.
At
I
the
love
end of
that
the day,
productive hours, because
distribution
you're
of
right. A
all money.
lot of dead hours.
Yeah, the only thing I'll say to that, and a great point too, Becky, really appreciated that. But throughout all of human history, redistribution of wealth always goes from people without knowledge to people with knowledge, always, throughout all of human history. And so ask yourself who you are in that equation. And if you're the one without knowledge, you know what you see.
Great points. And one of our other coaches, Coach Breezy, who does some PM trading. So if you are busy all during the daytime, we do have coaches at night. But he said something that I think is great. A question you need to ask yourself: if you are coachable, anybody can make this a reality. It's a trait that serves us well in life and into the markets. Are you open to failure, applying that feedback and failing forward into the future? If so, this is your place to be. I think you really need to look into yourself and see it like that. And let's end it on that. These are gold questions and gold answers. And going into next week, we have something special for our BluSky traders. If you were a Project X user and you got rug pulled like most people did, we have a new platform called TradeC that we are launching. Very, very similar to Project X. You can even add things to your chart with AI. If you want to add VWAP, you just tell it to. No searching for indicators, no anything. And I've been using this platform for about a week now. And I'm really, really liking it. And other than that, if you haven't joined us, you've been waiting for a new platform, that code WELCOME26, 50% off. It's just a crazy sale. And one more thing, if you're on the fence and you don't know what the vibe of BluSky is, join our Discord. You can pop into our lives. You can watch this podcast live right now and see if you like us, if you don't like us, or if you like certain people. So we have something for everybody. We have a platform for everybody. We have a sale for everybody. And until then, we'll be back next Monday at 1 p.m. Eastern, filming this live again. Be sure to share this with your friends, like, comment, help us get the word out. And until then, stay profitable, guys.
Take care, everyone.